Meta reported their second quarter earnings on July 31st. They beat both revenue and earnings per share expectations. The share price popped to $526 on the news, and several analysts across the street raised Meta's price. Second quarter revenue was $39 billion, up 7% sequentially and 22% annually. Solid gross margins of 81.3% were slightly lower. Operating profit was almost $15 billion, up 7.5% and 58% respectively. Meta's operating margin is 38%. Net income delivered $13.5 billion, up 9% from last quarter and 73% from Q2 2023. Net profit margin is 34.5%. Meta's quarterly income statement numbers have revenue growing by 3.4%, gross profits by 3.3%, operating profit at 6.6%, and net income 8%. Steady growth. Revenue by segment has the family of apps as the principal breadwinner. Reality Labs adds very little to Meta's top line. Operating profit by business segment shows just how much Reality Lab loses, costing $4.5 billion. The family of apps operating profit grew by 9.5% this quarter to earn $19.3 billion. Turning to Meta's fundamental valuations, earnings per share were $5.16. The analyst community expected $4.73. Meta's PE is almost 25 times compared to the S&P 500 at 27.94. PEG ratio nearly 3. Sales per share were up to $57.39, giving us a price-to-sales ratio of 8.5. Book value was also up to $60. The price-to-book value ratio is slightly more than 8 times. Meta's cash per share is $12.28, but if you include marketable securities, that jumps to $22.25. Price to cash is between 22 and 40, depending on what you prefer. The leverage ratios have debt at only 0.08 and debt to equity of 0.12. Liquidity ratios put the current at 2.8, the quick at 2.7, and cash at 1.2. Meta's return on assets were 22.3% and return on equity 32.8%, both improved from last year. Return on capital employed was 29%, return on invested capital 29.8%. The effective tax rate is 14.4%. That is a NOPAT of $50 billion and an average debt and equity of $169 billion. Meta has good cash flow data. Operating cash flow was $19.4 billion. Investing outflows were $18.3 billion. They spent $8.2 billion on property, plant, and equipment. Financing outflow was $11.2 billion, spending, among other things, $6.3 billion on share repurchases. Free cash flow to the firm was over $11 billion. Price to free cash flow is 114 times. Meta is now paying a dividend of 49 cents. That is a 40 basis point yield. The payout ratio is 9.4%. The enterprise value of Meta is $1.26 trillion. That is an 8.4 multiple to revenue, a 17.5 multiple to EBITDA, 21.4 times EBIT, and 112 times free cash flow. Meta provided limited guidance for full year and Q3. They're expecting revenue between $38.5 and $41 billion, which will be up 16% year over year. Full year outlook has total expenses as high as $96 to $99 billion. Meta expects costs to grow due to infrastructure growth. They also cite capital expenditures up from $35 to $40 billion to $37 to $40 billion. 2023 full year expenses were $82 billion, including cost of goods sold and operating expenses. Key takeaways from the report: good top line results. The gross margins at 81%, plenty of cash, paying a dividend. Some of the valuations, like price to book and price to sales, look interesting. On the con side, there wasn't much really to talk about. The PEG ratio of 3 suggests earnings aren't growing as fast as they should be. Guidance is expecting further capital expenditure, which could impact the bottom line going forward. And is there an overspend in AI? That being said, we're giving Meta a buy rating. We have no exposure to this company. Like and subscribe.